Thank you for tuning in to another edition of the Vulcan Report. Now we're taking a focus on the commodity softs market. This is a chart of coffee. Based on yesterday's price movement, we did manage to close up around 2.26%, and prices closed higher than they opened with strong bids going into the close. Looking at our market sentiment, we have a pulse scan reading of 36.95. The market pulse is positive since it's trading above its zero signal line. The pulse scan crossed below the swing VIX, creating a downtrend channel as of one trading session ago. We do have a rally alert going into tomorrow's trading. So for February the 10th, for Thursday, we do have a rally alert. We do have a short-term market bottom, so we have a possible breakout, which is likely due to strong market pulse projections. And the last signal that we had was an overbought sell signal as of a day ago. And the securities price has set a new 14-period high, while the swing VIX has not. This is a bearish divergence. Since the pulse scan leads the market 3 to 5 days out, we'll wait to see if downward pressure picks up. Yeah, so just remember that the pulse scan swing VIX does lead the market anywhere from 3 to 5 days out. Sometimes when we get these readings too, they happen in the next trading session. So we will be alert on Thursday to see what happens. Since the last swing VIX signal, coffee's prices increased 2.26%, and it's ranged from a high of 254.05 to a low of 246.70. Taking a look now at momentum, currently the trend is very bullish, and this market is under heavy accumulation, and our trend strength reading is also bullish. Our price projections for Thursday's trading sessions are as follows. We have intraday resistance at 252.64 and support at 249.20. We are still not trading above the weekly pulse wave price projection target of 253.60, but we are managing to trade well above the support level of 246.70. Looking at our 12-month outlook, we have a price target of 381.55 for the next 12 to 18 months. And volatility, we did manage to close below the upper volatility band by 9.8%. So you know what to do when you get the spreadsheet. You know how to play this market. Just follow the sheet as far as the entries, exits, and stops. One thing I want to point out on this chart is that the blue line did manage to converge with the red line and then finally break back out again. If you look at the chart, the last time we did that, we did manage to build a base for the next upward move, and we went from the 205 area all the way up north heading toward 240. So looking at another 35-point possibility, that would put us at the close up here to this well above 260, and then to maybe 270, 280, pushing north to test that 300 level. So we should see what happens there, but it is possible that the coffee contract could trade north of $3, and that would be just phenomenal. Okay, now switching our focus to the sugar contract, sugar futures. This market is still bullish. We're trading above the Kumo cloud here. You can see that we consolidated above the cloud for a while here, a couple of weeks. Then we broke out, kind of topped out, put in another big bar here, similar to this bar here, and now we're kind of consolidated, but with the downward bias, as we are in a downtrend channel right here. The good news is that the blue line is still above the red line, but it looks like it's coming down and wants to cross below it. So sugar is in jeopardy of not only falling further, but dropping well below the Kumo cloud and getting down dangerously close toward trendline support around 2450. So we'll have to wait and see on that. There is no system generated entry point for sugar going into Thursday. So we're going to just have to watch it, but it is looking like it may be topping out here, and we could be in for a rather sizable correction. This market also is getting dangerously close to putting in a negative pulse wave. The negative pulse waves are pretty powerful. They usually lead to very significant moves. So it's the opposite of a positive pulse wave. So if we get another pulse wave, then that's going to be the true test of the sugar market to see if it can build a support and resume its bull trend. However, if we put in a negative pulse wave and we get a continuation and follow through, then it does leave credence that we're going to come down to this trend line support and test it and maybe even break below it. So sugar is in danger of major correction at this point. Okay, taking a look now at cocoa. Cocoa has been wild and all over the place. A lot of it's due to the fundamentals, the rumors and things going on in the Ivory Coast with the military coups and takeover and civil unrest. That's been going on forever. So you really can't put a lot of stock in the fundamentals because fundamentals don't always line up with the technicals. However, the current position of this market is bearish. Okay, we are in a downtrend channel. Okay, hence these red candles after we topped out here, and that is still in play. It's still intact. Looks like we're setting up for the next leg down in this one too. It's going to try to stay above this putting in a negative pulse wave, but as you can see, the blue line is starting to turn down. If it gains downside momentum, it could cross the red line, crossing here around 33 even. And if it does that, then we are in dangerous jeopardy of hitting trend line support, which is around 30.07. And you see we're not so far away from the trend line now. So major topping out could be happening in the cocoa. And here's the Kumo cloud here. Not a lot of wide space, so we could easily drop below that Kumo cloud unless we can resume some type of a technical pattern. But as you can see, it's been spotty at best, and it's been well below trend line support. I'm sorry, trend line resistance here. This black line right here. Okay, and it only managed to pop above it because of speculations in the Ivory Coast. Okay, going back to December, we popped up, couldn't stay above it, collapsed, popped up again, failed to stay above it, collapsed, popped up again, and this time we put in a gap from here to here, and now we're just kind of like negative right now. So we've been seeing a lot of profit taking. Don't know if we're going to get any follow through on this, but it's something we're definitely going to have to watch. And again, no entry points for the cocoa. Okay, switching our attention now to crude oil. Crude oil has just been pimped to no end. As you can see here, we are trading above the long-term trend line support, which is currently at 78.54. We are well inside the Kumo cloud, so we are consolidated at this time. Every time we pop up, it seems it gets smacked right back down again. Here we popped, corrected slightly, popped, corrected strongly, popped, corrected even harder, and we popped again, corrected even harder again. So you could make the argument that we're building support within the Kumo cloud. Okay, hence these two supports here. We come right down to the bottom of the Kumo cloud, and then we seem to retrace. So it's safe to say that we could be putting in another bottom and looking for another test of this resistance zone up here. So we have strong resistance here at this 92.84 level. So we'll just say the 92.80 range is resistance right now. So it's struggling to get above that $93. So on the next breakout to the upside, we should see if we can break that or not. but we are consolidated, so we do anticipate sideways prices, sideways to lower, because it looks like we could break below the Kumo cloud here. So it looks like crude oil does want to get back into the 85 range and even below that. And again, our trendline support is at 78.54, meaning that we could pull all the way back here and still be bullish and still maintain bullishness. Okay, so something we need to watch. We do not have any entry points for Thursday on the crude oil, but we are in jeopardy at this time of putting in a negative pulse wave to the downside, which would give a lot more fuel to the downside coming to test this trendline support. Okay, so we'll be watching that one. Okay, seems like topping out is the theme of the day and just about everything. This right here is cotton. As you can see, we had a nice breakout from this base support level that we put in. It took about 2.5 weeks to complete. Finally broke out, and here we are. Now, you saw what happened the last time we topped out. Nice correction to the pullback. We topped out here, but instead of pulling back, we went even higher. Corrected slightly just to the first trendline support, and then broke out again. So we're going to have to watch this one, because we're hitting new highs, it seems like, constantly, and we don't know how high it can go. But at this rate, all things being equal, it looks like the cotton wants to go even higher. It wants to break that 200 range. So I would not be looking to short this. I'll be waiting for the next opportunity to get long. As you can see, the system has been long all the way up, and we've put in, since this base support here, we've put in 3 pulse waves: 1, 2, and 3. So we're still within the 3rd wave now. We'll see if it's going to correct, or is it going to build a 4th wave. We'll have to wait and see, but this market does remain extremely strong. And remember, when it's in a bull market, we don't know how high prices can go. They just keep going until they don't go anymore. Okay, so if you're long the cotton, you're going to want to move your stops to lock in some profit, and don't be greedy, because it can go lock limit up or down at any time. Okay, taking a look now at corn. As you saw, we did open up. We gapped up 30 cents on the open yesterday during the trading session. System is still holding longs in the corn, moving stops to lock in some profit. We did manage to get up to $7 and 3/4, and that's quite an amazing run. You know, markets can stay extremely bullish for extended periods of time, so you just have to watch it. You know, you don't want to get into the habit of trying to pick tops and bottoms, because you'll get burned. Anyone who was shorting here was feeling pain all the way up. As you saw, we just kept extending the overbought condition. Then when we corrected, it was only slightly. All right, and then we put in a new top, sideways movement, put in a new top. So since this overbought base back here, we can put this in. All right, we based out here. Okay, put in a pulse wave while we were basing out. Second pulse wave, third pulse wave, 4, and then we put in a 5th within the 4th wave. So chances are, when you get this many close together like this, and after you went overbought here, and then came here, and then got to this point, we still have more upside to go in corn. It still has more room. It is not showing it topped out. We hit our top here, but we corrected enough to get it out of overbought. Now here you go. So remember, take what you can and give nothing back.